Hello everyone. The XDC 2.0 upgrade, real world asset adoption, and why XDC, in my own opinion, with some research to back it up, will reach a minimum of $5.36. Now I get it. A lot of you guys watch a lot of other channels and people say a lot of crazy things. I'll do my best to back that up, and I think that's lowballing it, all right? What particular year am I referring to? Well, you're going to have to listen to this outline. You're going to want to hear about all of the new key developments of XinFin's XDC. Smash that like if you haven't done so already. Consider sticking to the end of the outline if you choose to do so. There are chapters, of course, in the description. Here we go. First thing we're going to jump into is this right here from an official announcement over at Generation Infinity, believe it or not. And as you can see right here, it gets kind of into the weeds of things, and I decided to basically play this key part of this for you guys. So as you can see, it is these guys on the right, real world assets, real world adoption. Who's building this? Everybody's asking this. Pay attention to what's really going on. Are institutions really building this? Well, let's go ahead and play this, and then we'll come back here in a little bit, because when you see topics of forensic monitoring and advanced security, well, understand it's not just about internet value, like I pointed out before. It's tokenization at scale and also creating the internet of trust. Here we go.
Yeah, absolutely. I kind of want to go back to some of what Quincy said because I think he really hit the nail on the head. And really, where we're seeing with this, I guess, phase one of tokenization, where we're at now, is I think consumers are ultimately benefiting from institutional adoption of these types of things, right? So when you look at what we're doing, which is, I think, the kind of industry is termed as private credit, these industries have been exactly that, right? It's been very difficult for a retail investor to come in, or even a smaller investor, to participate in these, for example, consumer credit markets. Typically you have to be a big institution to even get access to these opportunities. And then there's a segment of those that aren't really interested in participating in those opportunities because they're illiquid, right? And so the ability to tokenize positions within these funds and make them freely tradable is something that's going to just drive so much more capital inflow into these markets. And ultimately, people like consumers are going to benefit because obviously there's more capital available. The interest rate associated with that goes down, and so consumers are big winners there. And that's really kind of the thesis behind what we're doing with version one of Zyvo, which is let's take these existing credit markets, tokenize them, bring them on chain, and make it easier for people to participate and expand the supply of capital that's available in these markets. But ultimately, to get to like what I would say real world adoptions, how do we get consumers to utilize these underlying technologies without them even realizing it, right? I forget who said it, but somebody said, really we need to make the blockchain more seem like the back end, and that's exactly what it is. It's a database, right? And so what we're trying to do with Zyvo moving forward is how do we abstract all this away and get it to a point where consumers can really benefit from things like instant settlements or these kind of shared ledgers where we can record credit history on chain and make that available to other lenders, to really help these people move up in their financial journey. So that's really what we're focused on with Zyvo moving forward is turning this into a platform that consumers can easily access and benefit from directly, not just indirectly.
Okay, so that's obviously a project in regards to Zybo and the ecosystem of XDC. Getting more into it, I want to take you over to here, and let's pull this up on the screen as well, because you know what? All of these things, like I said before, are definitely worth pointing out. So on the screen, you're going to see Genfinity, and in this, look what is mentioned. Unprecedented security, forensic monitoring, and slashing. Did a little brief outline about this before in the last video. But alongside this new change of XDC 2.0, it's introducing a powerful, like it says, forensic monitoring system. This feature continuously tracks node activity, identifying any rogue or malicious behavior in, of course, real time. If a node attempts to undermine the network, its staked XDC tokens are immediately slashed. This ensures a high level of accountability. making it nearly impossible for bad actors to disrupt the network. Again, back to the whole topic of not just internet of value, but internet trust. And here's the thing. Unlike traditional blockchain systems that only react to attacks, XDC 2.0 proactively prevents them. The real-time tracking and slashing mechanism creates a security environment suitable for institutions and enterprises that demand robust protection. For industries such as finance, supply chain, and healthcare, this is a game changer. I could not agree more. And if anything, look at the visualization on your screen. You can see how this all basically works. You don't have to be a rocket scientist to figure it out. But again, what about these institutions? Well, as we see down here, it's setting XDC apart. And at the end of the day, how can it truly compete in the blockchain market? In a market crowded with blockchain platforms like ETH, Solana, so on and so forth, XDC 2.0 stands out by offering unique features that address specific pain points in security, scalability, and of course, institutional adoption. Now, we understand the whole thing of the high price of Ethereum, but in contrast, XDC 2.0 focuses on forensics monitoring and subnet customization, which makes it an ideal platform for financial institutions. And of course, there's the whole thing of interoperability. There's this thing called XDC 0. But for developers and enterprises looking to build complex, scalable applications, XDC 2.0 provides a more versatile, secure, and efficient option. So, thought this was interesting. Glad to bring it to you guys, because that leads us to the next thing. Posted over at XDC Foundation. Of course, this was on the 27th, but again, it's what we're coming up to. A lot of you guys might not have even tuned into this, but it's real world assets that are coming to XDC. And when it's here, what happens? Everybody FOMOs in. Well, those prices that we see for XDC, they're not going to be there anymore. But this was interesting to me, and I thought I would bring it to you guys because the whole topic of enterprise grade real world assets, tokenization, how it comes to XDC, well, these guys, and I know a lot of you guys do listen to these guys, they came together and they had an outstanding panel discussion. I fast forwarded to this key area for you. Listen to this. Let me know what you think in the comments. Let's go ahead and play this, and then we'll be back here shortly. Here we go.
Amazon didn't start as Amazon. They started selling books.
Yep.
And then they kind of expanded out from there. I want to ask the RWA Day crew, because I think sometimes just to step back a little bit, and I like the one topic that you have here for the roundtable, and you do this twice at RWA Day next week, and it's mass adoption, the journey to $1 quadrillion dollars in RWAs on chain. And I don't think most people kind of realize, and I understand like the reasoning for putting that as a topic and stuff like that, but I kind of want to get into just where you guys feel like we're at in the tokenization. If this was a baseball game, what inning are we in? And maybe to preface, Max, all of us have probably been here since I think the first real stuff we started hearing about real world assets on chain was obviously probably like real estate, maybe a handful of years ago under the NFT purview. And it's obviously shifted a lot from now, but where are we in that journey to $1 quadrillion dollars of tokenized assets on chain? And I guess I'll start with Travis because I see a little grin. So
Yeah, I'm behind that title. So yeah, I'll own up to it because I know I could get some pushback to it. But actually, everyone loves it. I mean, first, just I'll give some reference to the point. I mean, capital markets in general, arguably about 700 trillion. So I think most people would agree that that's probably about a fair number. But a lot of people don't realize that the future of tokenization, of course, will involve the same thing that capital markets have now as derivatives. So there's a significant amount of derivatives of tokenization that will take place, whether it's IP rights, obviously ownership in companies, you can appreciate that coming from plug and play, company shares, et cetera, you name it. All kinds of derivatives are going to pave the future of tokenization. So, that's been the spiciest topic that we have of the five, and all of our table leaders, a lot of really prominent people in the space building Really love that topic and really excited to kind of lead those conversations. I'd say from like where we are, I mean, we're literally just learning. We're picking up the bat is where we're at. I don't think we're even in an inning at this point. I think we know what baseball is, and we're obviously out there throwing the ball with our dad or something. But like, I don't think we're even in the game yet, to be honest. I think it's that early. Like, granted, we've laid a lot of the foundation. So like the baseball field's there, baseball's invented. We're throwing with our dad, but like the actual play ball is still early.
Yeah. No, and I think it's interesting. I mean, coming from some like sleuthing and stuff like that, and you get into this space and you start looking at entities like DTCC and what they do with derivatives markets and trialing out tokenization trials, and that stuff's been going on for years now. I mean, it's not like they just started dipping their toes into the the blockchain and DLT arena last year. I mean, 2015, you go back however far you want after 2009, really starting after 2015. But yeah, I'm curious from Tyler's standpoint, when you look at, maybe this kind of also gets into kind of what are you excited about? What are some of the cool use cases that you're seeing that you haven't seen kind of previously, and where you feel like we're at in that baseball game?
Yeah, I can relate to Travis's metaphor. I find it pretty funny. I would have said like first inning or something, but you're right. Maybe we haven't even picked up the bat yet. I will say we do tend to underestimate what's possible over, let's say, a 5-year to 10-year period, and we tend to overestimate what's possible in the next year or two. So like there's been times where I've been talking to my co-founder Ray, and I'm like, yeah, we're gonna hit like 1 billion in this particular asset class by the end of this year. And it's like, oh, that just didn't happen. But then you see this like massive, like there's this moment where things massively flip up and to the right. And I think one example of this is the difference between, let's say, bringing a net new asset on chain versus replumbing existing assets. And I think if you actually take an approach to the market where you're not just looking at net new assets coming on chain, and instead you think, well, what if the entire derivatives market was tokenized? Well, the entire derivatives market is in the quadrillions. So it's not very hard to get there with derivative financial instruments. So then it all becomes a game of, well, how are you measuring this stuff? And one of the ways that we just try to stay on top of this is with our weekly newsletter. I just perused a couple of the headlines that we had in last week's newsletter. And for example, like Plume Network is going to have like 1.25 billion in tokenized assets by their fourth quarter. That's what they're projecting. Now, you see all these different ways of tracking and counting different things. And you can actually see that like folks like XDC have been tokenizing a ton that they haven't been getting the credit for, because whatever hype cycle, others tend to kind of jump onto. And there's this kind of this tension with like, okay, this is another amazing headline. How come I'm not hearing about it more? So one of the things we're super proud about is that you're hearing a lot of tokenization news from us at RWA World and then at RWA Day. Like, we are out there aggregating and collecting all this information and trying to give it to our audience in a digestible format. And you start to see these headlines. You start to see, okay, wait, there's these CBDC development that's happening. There's these tokenized deposits that are coming onto the market. Like, there's all these things that are happening. And if you just kind of open your eyes, we might actually be further along than people realize. It just really depends on like which part of the market you're talking to. And this is where we try to give people a framework to at least just get their bearings, because I'm not prepared to fully answer the question of here's exactly where we are and we're going to be at this point by X date. It's just too difficult to do. But if I talk to enough people, have enough of these sorts of conversations, and then create the places where people can connect, like at RWA Day, you start to see this narrative form, and you start to realize, oh, we're actually like, the opportunity here is awesome. Because we don't want it to feel like the 8th or 9th inning, because then it's too late, right? And then folks like Billy and Max and Travis and you, Solomon, right, we're like, oh, we missed the boat. Trust me, if you're hearing this, you're early enough to get involved. There's so much opportunity here, and we want to just help people sort that out. So I think I answered part of your question, Solomon, but I think you had another part to your question. Did I answer the other part?
No, yeah. And I just go back to like, I know when you and I did our interview, we were going through RWA.xyz, and I did a video after the fact on that, and because they have some charts, and that's why I wanted to pull up RWA World. But I was like, in that video, I'm kind of looking through, and everybody looks at the crypto charts, everybody looks at total market cap of Bitcoin and total market, whatever. And you can see kind of just the meteoric rise of digital assets in and of themselves. But then you look at the tokenization charts, and I mean, I think on RWA.xyz it has like something like $12 or $13 billion tokenized on chain, which is like and you put into context of where that number was at a couple of years ago, and it was like probably in the tens of millions, maybe. And then you put into context, well, okay, well, where is this going to be at? You know, we're starting to see the BlackRocks of the world come into this space and everybody else. You know, I would imagine that's the 12 or 13 billion dollars tokenized real world assets on chain that we see right now is probably not even going to look like this parabolic rise. It's not even, you might not even be able to see where we're at right now if you look at a chart like that 3, 4, 5 years from now. So, and I would love,
that's why I think it's so important to figure out, what do we mean when we say a tokenized asset? What do we mean when we say an RWA? Because there's a lot of different ways to define it, and we take a pretty broad view on our database and how we look at things, and we tend to just imagine, all right, if it's some type of an asset that's deriving its value from off chain, so like a dollar is a RWA. You know, like stable coins are the best real world asset that's found product market fit, because it just works. Everybody understands it. If you don't include the stable coins in your RWA tokenization projections, it'll be a lot smaller. But if you do include stable coins in that, then it's like, okay, yeah, this market cap is going to be absolutely huge. I remembered your other question, Solomon, which was like, what are things I'm excited about? One of them is actually collectibles, which you have here on the screen. Tokenized memorabilia, sports memorabilia, trading cards, things like this. We've seen some pretty compelling use cases in that area, which is kind of an exciting and sexy topic that not a lot of people think of. Financial instruments, like Billy was saying, things that are boring just because they work, right? And you kind of do want the industry to be boring in some ways, but there's also these fun use cases that are different than just an NFT that's just a JPEG. You actually could have an NFT that is redeemable for an underlying physical asset. And that tether into the real world helps people sort of get over this mental block they have, which is like, all right, it's digital Beanie Babies that don't exist in the real world. If you can actually have a tokenized Michael Jordan basketball card, it's like, oh, okay, interesting. If you actually could get a Donald Trump suit during a speech, like he cut it up and made it into an NFT that you can then redeem for the physical like part of his suit, like that's really interesting, and it's tied to the real world. Like there's these examples of memorabilia and collectibles tied to NFTs or tokenized assets. And I think that's pretty interesting and cool, because now when I talk to my dad about tokenization, he's like, oh, you're saying that like this coupon, this token is redeemable for something physical? And I'm like, yes. And he's like, oh, I get it now. And that's like, I've been talking to you about the blockchain for years. How come like you're just now only getting this? And I find that a really great entry point for people who struggle. So like, depending on who I talk to, Solomon, I'm like, okay, well, tell me about yourself. Like, do you like art? Do you like music? What do you like? And then I find my angle, and that's how it works.
All right. Sometimes we had to go a little bit further in the videos, the clippings, right? Because there was a lot of talk about RWA. So speaking of RWA, there's an event coming up. It takes place in Utah. I'm, of course, south of Utah in Arizona. I won't be at it because of work, but if you're in Utah or go into there, you may be interested in it. What is it? Well, it's this right here. It is referred to as RWA Day. And of course, you heard those guys talking about it. I'm going to pull this up on your screen for you to see it a little bit better and what it's all about. This was posted by one of the gentlemen that was in the video. And as you can see right here, this is from Tyler of RWA World. And it goes on to mention that nothing more exciting to him than seeing new registrations come through RWA Day. And it goes on to also mention that they saw a huge influx in the last few days, which is cool. But basically speaking, this is going to happen October 8th. And according to my calendar, that would be Tuesday of next week. Okay. And like you see right here, you're more than welcome to learn more about it. It takes place, of course, in Salt Lake City, Utah. All right. Next thing I want to get into just briefly is this concept of this thing called LUCA. A gentleman that was on that panel was from Plug and Play. Plug and Play, a lot of people feel as though is the accelerator, basically speaking, for XDC. I couldn't agree more. But they were pleased to announce their investment in a thing called LUCA. No, I'm not talking about NBA basketball, LUCA Doncic, but it's the leading alternative investment platform provider in Japan. So you guys know I'm very bullish on a lot of things Japan. I covered Jasmine quite a bit, and let's face it, people asked me which one I feel as though would take off first this year, and Jasmine was the one. So anything I see about Japan, especially XDC, I think this is definitely worth bringing to you guys. So digital platform simplifies investing, reduces minimum investments to increase accessibility to investors. But they want to develop their business in a way that matches the needs and scale of the public. And as I take you over to here, talks about how LUCA is revolutionizing alternative investments in Japan with digital innovation. But again, the whole thing of like what they bring to the table, and like it says, alternative investment market in Japan. So what exactly is this? And more importantly, like a global alternative to the investment market? Think about this for a second. I mean, man, there's trends, and more importantly, it's what the financial or major financial institutions are using. So there is this thing called LUCA, and as I got into it, I said to myself, well, sounds interesting. What is LUCA? Like it says on the screen. If you go over to luca.inc, it's the first alternative investment platform in Japan. And again, this really caught my attention because I'm always trying to pay attention, just like you guys, to what the institutional bigwigs are doing. So look what it says. Access to alternative investments has been long, or been limited, I should say, to institutional investors due to the complexity of the investment process. LUCA, on the other hand, is the first alternative investment platform in Japan, and more importantly, it is possible to provide investment opportunities to a wider range of investors, including individual investors, by completing the process in a one-stop. So is this a one-stop shop? Well, it says the market becomes more scalable through digitization, and the minimum investment amount of overseas alternative funds basically usually is said to be 500 million to 1 billion yen, can be lowered to tens of millions of yen or less. So there's incentives here. But again, understand that all these things, the before and after, this is what caught my attention, because it's all about going from large minimum investment amounts to basically, the reduction of minimum investment size. So what are the alternative investments, like it says? And it goes on to mention that you have way different amounts of investments, of course, post World War II, like they mentioned, but why are they pointing out? Like, what's in the spotlight? So it's understanding that you need to have a diverse portfolio, but this part about the recommendations, and they recommend investors who aim to diversify their assets away from listed stock bonds and mutual funds. I mean, think about this. We're talking about real world asset tokenization. This is the bridge to some of this. And more importantly, this is Japan. So interesting to see some of this. And as I got into the next part, if you go to privateequityinternational.com, talks about how Japanese is doing a fundraiser, and it's the platforms. So have this connected to XDC, I think, is a big deal. This is nothing new, technically speaking, but last time there was an update was February 27th. Again, the whole talk of the XDC connection. So like it says, Japanese fundraising platform LUCA eyes more alts after formal launch, and besides private credit, LUCA 1.0 also is in talks to introduce private equity secondaries, a fund venture capital fund, and a private market support. And basically speaking, I mean, when we talk about this new XDC 2.0, forensics and so on, keep in mind, this is Japan. They don't want to repeat anything like a Mt. Gox. So to see forensics, XDC mixed in the whole thing, I think that's worth pointing out. This is Tokyo headquartered in regards to LUCA. And again, what does it say? It upgrades, from its beta version. So they're constantly working on this. And the platform was set up in 2021, so they've been around for a while. But capital, we talk about capital market ecosystems. I mean, my goodness, but LUCA currently allows individual investors to invest with a minimum ticket size of 200,000. Geez, I mean, for a lot of us, that's still kind of a hefty amount, but much lower than its initial range of 500,000 to a million. So again, having is this inclusive to some people that aren't, wealthy, right? I think the answer is yes. But besides private credit, LUCA 1.0 also is in talks to introduce private equity secondaries, a fund of venture capital funds and private market support fund. All right. Well, this sounds like real world asset tokenization to me. And basically speaking, I mean, look what it says. Japan's wealth management landscape is projected to reach 6.5 trillion of assets under management by 2028, up from 6.3 trillion in 2022. But its potential for alternatives is backed by several tailwinds. And again, this is just one example, but I think this is definitely worth pointing out, and I'm glad to see this posted over from XDC. Now, as I take you to the next part of this, XDC had an article about adoption. So look what it says. XDC adoption with interoperability taking the digitized flows higher percentages. Wider adoption will require simpler applications, low or no cost to use the basic functionalities, and new liquidity providers to support the trades. Well, what's interesting, it says, by 2030 beyond, we will likely see greater adoption with interoperability, taking the digitized flows to higher percentages. I mean, this is one thing I love that XDC has got going on with R3 Corda and XDC, of course, with Quant. And it's just like, wow. But wider adoption requires simpler applications, low or no cost to use the basic functionalities, and new liquidity providers to support the trades. Again, understand the XDC plug to all of it. All right, check this out for a second. Because when we get into the weeds of ITFA, well, you got to understand that Zenfin's XDC network is the first blockchain company to join the global TFD initiative. I talked about this before, but I want to pound it home again. And it's all about boosting automation, transparency in what? Trade, asset, and risk distribution. As you can see here, to establish trade as an investment class, TFD initiatives are working to define a new technology-based market practices and transaction data specifications. It's all about that trade flow. But as you also see here, it talks about that XDC network is definitely a network utility providing smart contract technology to produce cryptographic tokens. And of course, they are selected to join the TFD initiative by fintech veteran Andre Casterman, whose impressive track record includes over 20 years at Swift. All these people flooding XDC stating that they haven't done anything, respect that they built. And more importantly, they have a guy who heads up the whole thing that understands trade, but more importantly, understands messages, especially with the whole thing of Swift. So he spearheads that. We understand that. But again, here is your, I guess you could call it boil it, mash it, stick it in a stew moment. Because when you understand the initiatives, understand this. Zenfin, like it says, XDC network to TFD initiative, as this enables us to bridge the 19 trillion trade finance asset class with any type of funder through tokenization and digital assets. Didn't say some, says plain as day, any. That is so crucial for your understanding moving forward. Now, at the end of the day, I want to take you to this, because I want you guys to understand that if we were to take just 1% of 19 trillion, that'd be 190 billion. All right, let's lowball it even more. How about a 0.5%? That would put us at 95 billion. Well, if we were to go over to CMC, the closest thing that would come to that would be BNB, which is ranked 4th, and that's at 80 billion. So we're even lowballing even further from there, okay? To be even that much more ultra conservative. So what about XDC with the market cap of BNB, okay? Basically, you know, we know that XDC is going to do quite a bit of tokenization, but more importantly, 0.5% of that 19 trillion. I think that is more than being conservative. That is being extremely conservative. So, as you can see, BNB is sitting at about a little over 80 billion in market cap. And with that said, if we go over to market cap of XDC with the current market cap of BNB, would put XDC at $5.36, which would be $183.70 or $183, excuse me, 183.74x. So does that happen by 2030? I mean, I think that's been extremely conservative, and that's not too shabby. I have XDC way higher than this. And again, you know, my key thing is this is just minimum, right? Some of you guys just want the extreme minimum. You don't want all the hopium and dreaming. So there you go. I thought I would bring that to you there, or excuse me, to you guys there. And that's where it's at for me. Thought I would share it. Been a while since we did the XDC outline. Let me know what you think in the comments. Simply do me a favor if you listen to the entire outline and simply type this into the comments, and that is 5.36, and I'll know that you listened to the entire outline. I really appreciate you guys listening, tuning in. Know what you have, know why you hold it. The research trumps FUD 110%. We'll see you on the next one. Some of you guys ask what cold storage solution I use. I use this, and it is the Decent wallet. All right. I also, of course, have a ledger like this. All right. You can get a discount basically from going into the affiliate link, which is in all the live video descriptions and recorded and so on. And for the yahoos that are out there, they're like, this is just a shield. And, you know, Will Fix point this out, and it's a great point. Were you aware that you don't necessarily get a discount link just going straight to the site? No, you actually have to go through a platform like this. So how cool is that? You know, I don't think anybody's complaining about that. But anyway, use the link, get a discount. There's another one here. If you're the type of person you want to get one for you and your, you know, significant other, you can get two of them. They actually have another promotion, which is this, and I think this is cool. You can get an all-in-one card wallet plus backup card package. Interesting. I thought that was cool. And again, one of the main key things I like about the Decent wallet is not having to do the red tape of, you know, jumping through all the hoops for XDC and the custom folder. I mean, Edward Vincent can vouch on that. Some of you guys can too as well in regards to Ledger. That was a pain in the butt. You don't have that problem. You literally open up your phone, it's on your app, track everything that's going on, right? And, you know, saying goes, not your keys, not your crypto. You know the drill. Check it all out, though, if you wish to do so. It is truly the cold storage solution that I use for the most part. There's still some on Ledger that, you know, I kind of split it up on it and so on. So it is what it is. But if I have preference over one, I'm going with this one. A lot easier to use and so on. And some people, even to this day, still ask me which one to use.